Hi everyone, welcome back to Be Rich. I hope you're doing well and you had a wonderful day and you're back to enjoying your end of the week Friday and you're looking forward to Saturday and Sunday, and please be safe whatever you decide to do on your Saturday and Sunday. Today I want to talk about what is happening in the Indian market in a larger, broader sense, which we've been going through for quite some time. Rupesh sent me a few articles and he said, it'll be nice if we can talk about this because our audience would really like to know more about what is happening in our market, and is this going to be there for some time? Are we in the cusp of a recovery? So I thought I'll dive into this. At the end of the video, I'll give you my thoughts on, as a value investor, what you should be doing and how you should be analyzing companies right now before you decide to dip into them. First, microfinance companies have been struggling. We've all known this. Now the news has come out that the NPAs have ballooned up to 50,000 crores. This is an all-time high where over 13% of total loans are now falling into this box, which is showing the portfolio risk is rising in the portfolios. That is a 91 plus day portfolio, loan portfolios of theirs from 1%. It's slowly trickled up to 3.2% now. That means there's a credit deterioration. That means people are still unable to pay their loans. That means there's still a lot of weakness in the economy. In the lower strata of society where microfinance loans are given, people are finding it harder and harder to find the money to pay these loans, and that means consumption, whatever we've been saying about recovery, is not happening. Businesses are not happening, and there's still a lot of pain in that layer of society. RBI has been warning, saying that needs to be higher capital allocation by banks and NBFCs. What does that mean? That means more money needs to be set aside. If more money needs to be set aside for this capital allocation, that means less money will be used for business, less money is given in rotation. That means loans will become that much harder to get for consumers. So this is where it stands as far as microfinance is concerned. So what do investors should be wary of? Well, you've always been asking me about Spandana, you've been talking about Fusion. Are these opportunities? Should we be scared? Well, are these in deep discounts or is there more pain is the question. At least for the next few quarters, it is going to be critical for these companies. I would say, like Anand says, look at the promoters, look at the people backing these microfinance companies. If the promoter is sound, if the promoter is very large and they're very liquid and they've been saying the right things, then you're very safe in looking at these companies. Like Anand has said in many videos, he's not expecting this to turn around very fast, very soon. If you are a value investor and you're willing to go through some more pain, that means see your 100 rupees become even 20 rupees, 10 rupees, 5 rupees before you see any chance, glimmer of recovery, then it can something for you to consider. But remember, there are no guarantees in the stock market. This is not a done deal. That means just because we say it, the promoters are good or whatever, there is a big black box of information which we never know as retail investors. And that's where the black swans are and things can happen. Keep that in mind. So when you do allocate funds in portfolio, make sure you're mixed, you're balanced in your approach, and you do not get lopsided. I get very fearful when I hear people in our group suddenly saying they went and dropped a huge sum of money in a single stock, and that too right now. It is not the kind of situation to do that. If you're looking only at Tiffin-Coffee ranges, should you even be exploring any of these? Please do not take your family's bank account and go drop it in any one company. Even if it's a great company, even if it's a Tata company, I strongly advise you not to do that. That is because over 2,509 stocks are in decline. Feb has been one of the worst months so far in the history. This is followed up only by Jan last month, where it was 2,354. Right? The average decline ratio in the Bombay Stock Exchange is now at 0.77. That is near COVID lows. This is the third consecutive month of this kind of decline. So why is this decline happening? Two reasons. One, they have foreign portfolio investors are moving more towards China. I can understand why. The AI boom in China. China has delivered DeepSeek and they've delivered a whole bunch of new platforms like Alchemy, and it is showing that Chinese are able to do a lot of R&D. And even the new drug, which I was reading about, a cancer-treating drug by a small pharma company in China, is able to do R&D and create cancer-treating drug, which is considered to be one of the hardest things to do. And they seem to have cracked the code. So there seems to be something happening in China for foreign portfolio investors to feel encouraged about. And they're far more undervalued compared to Indian companies and Indian stock markets. So that's another reason they're moving. The other reason they're moving is the weakness in the Indian corporate earnings is very evident. Indian companies, quarter after quarter, the earnings have been looking very weak. and very shaky. So that's another reason to say, at least for the foreseeable future, the Indian economy is going through a weak phase. So that's another reason they're pulling out. The last is the global uncertainty. If you've seen what Trump and Musk are doing in the US and the way they're playing in Europe, no one really knows what their end game is or what game they are playing, because it seems to be more confusion than anything else right now in what's happening there. So all that has led to more uncertainty in the market. So people don't have clarity on which way they should be playing the market. So this leads to a lot of retreat from Indian shores as far as foreign investors are concerned. So what should we do? Should we just go pick up because the foreign investors are dropping? No. Please do not do that. Like I said, we are nowhere near any certainty of a depth. So keep it in Tiffin-Coffee ranges, as I always keep saying. The reason is we are 200-day moving average, if you look at, that says are we in a bear market? Well, that I leave it up to you to come to a conclusion. But the statistics say that 86% of the top 500 are trading below their daily moving 200-day average. So does that mean we are at the bottom because we are in two? No, it doesn't. Because this bull run we have been going through is been going on for 5 years, right? So that's still, if you take any of your favorite stocks and see 2 years, you'll still be on the green. If you see 5 years, some of them are really in the green. So there's a lot of money still left on the table. So I would say be cautious and careful. That is why I keep saying buy in dips, buy in small ranges. Do not get exuberant and become irrational, because in the Nifty 500, 427 companies are now trading below the 200 moving average. This is close to the COVID crash time, they're saying, which is March of 2020. That is 146 are down 10 to 20%, 135 are down 20 to 30%, while 93 are down by 10%. All these are statistics, because the reason is, if you look at it in terms of what is there left for a foreign portfolio investor or FII in India, there's still a lot of selling still available for them, and they will continue to sell until and unless they see something to change their mind. And like I said just a moment ago, there's nothing that's changing their mind in China, nothing they're changing their mind as far as macroeconomic news is concerned, where the Indian rupee and the dollar is concerned. So, and even in corporate earnings in India, there's nothing that has changed for them to think they should be hanging around. So is the market oversold? No, the market is not oversold. A lot of people are talking about a bounce back from here. I don't think any bounce back is going to be coming anytime soon. If there is anything, like my brother says, it will be a dead cat bounce, because simple reason, the economy is very weak. And that NPAs rising in microfinance gives you a clear indicator of that. If you kind of string it all together, you can see they may be saying lots of things in the media and the talking heads, but the proof is in the pudding, and the pudding smells rather rotten right now. So what do we do as value investors? Well, historically speaking, like Warren Buffett said, when there is blood on the streets, we should be buying. Yes, historically, opportunities do appear, but please do not buy blindly. There are 3 things which I want you to keep as your rules as you venture out right now in the market. 1, look at steady gross margins. That means companies should be able to maintain their pricing power even in a weak market. That means that shows there is still strength in their brand and their business. 2 is a healthy balance sheet. Are the companies avoiding debt? And especially in finance companies, what kind of loans do they have in their books? You know, your banks and your microfinance companies. The quality of debt is very important. Just not having a huge loan book is not of any use. That is important. And last is it a sound business model, this company which you're looking at? Does it have a strong moat? And does it have a predictable, good cash flow happening? These kind of things will help you to decide if the company you're looking at is worthwhile sipping in Tiffin-Coffee ranges, as I said. If you do find a gem, please keep it in mind to keep it in Tiffin-Coffee. I cannot stress this enough, because a lot of you keep asking me over and over again on Instagram, can I go have lunch? Can I go have dinner? Can I go for a holiday in the market? I'm like, no, please don't. Keep it in Tiffin-Coffee ranges. If it just changed, if there is such an opportunity, I'm sure my brother will be the first one to take out his blowhorn and tell you guys that it's happening. Right now, none of that is there. If anything, there's going to be more pain in the short term, in the next few quarters, before we can even talk about anything else. So stay safe. Have a wonderful weekend. Monday will be another day to opportunity to invest in the market again in Tiffin-Coffee ranges. Let's continue this conversation offline in Instagram, where we continue talking more about this. I'm there over the weekend to chat with you. Thanks for watching Be Rich. Have a wonderful evening and have a wonderful weekend. See you soon with another one. Bye.